Well, hello. I'm Robert Knechel. I'm a professor of auditing at the University of Florida in the United States and a professor of auditing at the University of Wangen in New Zealand. I also serve on the board of the Foundation of Audit Research in the Netherlands, and I run an international research center in auditing at the University of Florida. Today, it's my pleasure to moderate this session on the assurance of sustainability reports from the perspective of individuals who provide that assurance, who have actually done this in the field. There have been numerous developments in the sustainability assurance space, which we will discuss today, and each of the individuals on the panel provides a unique perspective from a different part of the world on the challenges of executing a sustainable assurance engagement. Some of the issues we'll probably talk about include determining what subject matter in a sustainability report is amenable to assurance, determining what level of assurance to provide, discuss the role of standards and how they apply to different types of providers, and talk about the differences across providers. Before starting, however, I'd like to briefly introduce the three panelists we have with us today, and I will let them flesh out that introduction when I call on them in a moment. First, we have Jonathan Skilton, who's a partner with PricewaterhouseCoopers in New Zealand, where he leads their sustainability reporting and assurance practice. He provides assurance services to companies with global operations with specific expertise in manufacturing and global supply chains. Second, we have Jyoti Vallabh, my apologies, a partner at Deloitte Africa within the Accounting and Reporting Advisory and Sustainability Business Unit. Jyoti is the acting chair of South Africa's Independent Regulatory Board for Auditors, the Sustainability Standing Committee. Finally, we have Dan Wangen, is an assurance partner with EY in Norway in their Norwegian Climate Change and Sustainability Services Department. His extensive experience working with climate risk, sustainability reporting, and strategy, where he helps companies adapt their strategy to account for future developments in markets, risk, and opportunities related to climate change and other ESG topics. So let me start. This is going to be a conversation, and I would like to just have you react to or explain, as you see it, what is the current environment for assurance over sustainability reporting in your part of the world, since we cover Europe, New Zealand, and South Africa. So I think I'll start with Jonathan. I think you're the farthest away from me at this point physically.
Yeah, so in the New Zealand context, we've made quite a significant amount of progress in terms of assurance over the last 12 to 24 months. We introduced a climate reporting regime based on the TCFD in New Zealand 2 or 3 years ago, and that regime requires assurance very specifically across the greenhouse gas emissions. It's been progressively lifted from just Scope 1 and 2 to Scope 3 over the next 12 months. Into a limited assurance sort of standard. Beyond that, there is actually a relatively limited but focused number of organizations that are securing assurance across other metrics that are relevant to their sustainability sort of strategies.
So most of the work in New Zealand so far is focused on the greenhouse gas emissions. Is that, if I'm understanding correctly?
Very much so. Yeah, it's very much a greenhouse gas and climate story in New Zealand at this stage, and that's because of the fact that there's a regulatory requirement now in New Zealand to prepare that information if you meet certain criteria. So if you're what they call a climate reporting entity, then you are required to provide this information to your investors. That regime, which is based on the TCFD regime, recommendations, is not required to be fully assured, just the greenhouse gas emissions component. So that's been driving a lot of the sustainability assurance activity in New Zealand, has been a very heavy focus for us.
Okay, thank you. I should also point out that elsewhere in the conference, there's another panel that discusses many of these same questions from the point of view of regulators and standard setters around the world. So between the two panels, we can, I think, develop a fairly good understanding of where the state of the art is at the moment. Jyoti, would you care to follow up and talk about South Africa a little bit, or Africa in general?
Yeah, for sure. So sustainability reporting in South Africa has actually been around for Pretty much probably as long as I've been alive, I think, actually. I started off as a chartered accountant, and when I started delving into the space, many companies already were reporting for many years, really striving out of more the mining industry, following GRI in terms of their reporting. In South Africa, there's no regulation. There's no mandatory in any sector related to sustainability reporting. It's actually all done voluntary. Over the last 2 decades, South Africa has been really progressive in its integrated reporting as well. And that really stems from the corporate governance code, King, or the various versions of King, which is right now King 4. And that really endorses the integrated reporting thinking, integrated reporting framework. And those companies which are listed on the Johannesburg Stock Exchange are required to comply with the corporate code of governance. And in that way, they started producing integrated reports. So you would have seen this mix of information coming through of the financial and non-financial information. So it's been around for a while. In terms of the assurance, once again, it's also voluntary. There's no mandating around it. You would see more of the mature organizations, probably more in mining, financial services, really going and obtaining such a sustainability assurance. But many other companies are following along the path to that. I think north of our borders, in the last couple of years, we've seen stock exchanges such as in Ghana, Nigeria, Nairobi, also starting to maybe not mandate, but give guidance around sustainability reporting and the expectations that they'd like to see from various companies. But in the last, since IFRS S1 and S2 was released in 2023, Nigeria was one of the first adopters in Africa of those standards, and their pathway starts in the next 2 years related to that. We've seen other countries, Ghana, Tanzania, Kenya, Zambia, also following that path. So while not mandated in South Africa, we've seen it for a long time, and other countries along north of our borders are actually following same suit.
Okay, thank you. Dan, actually, I'm curious. You're in Norway. What's the temperature there?
Well, we're following the EU quite closely. So being part of not the EU itself, but being part of the EEA, the economic and collaboration zone that we have within Europe as a wider, we're adopting the same rules. So we have had CSRD and the ESRS reporting standard implemented into Norway, but as many are probably aware, there's quite a lot of debate around how this will develop in the coming years. We've had a very significant ramp up where we thought we would have about 1,200 companies needing to have sustainability reassurance during this year. Then we had the rollback with the regulations, and we're now looking at maybe 120 companies. So it's quite uncertain, the future, going this back and forth. But at least in Norway, we're mirroring what's happening in Europe on the regulatory side, close to 1-to-1. I think that's quite a political census also on that we're not doing anything extraordinary from a Norwegian perspective, but we're feeling, let's say, the uncertainty that Europe is having on the sustainability reporting.
Okay, thank you. By the way, when I said what is the temperature, I literally meant what is the temperature in Norway right now? I mean, like outside.
Oh, well, the temperature is outside. Yeah, no, I think we got about 25 degrees Celsius and a bit of rain, so it's not too bad. So summertime, we're not complaining.
Yeah, well, I mean, given that we're talking about climate-related issues, I was just curious what's going on in Norway during the summer these days. So, Jonathan, how closely do you work with the Australians on these issues?
We are slightly ahead of the Australians in terms of the climate-related requirements in New Zealand, and they are launching their regime, ASRS, as it's called, very soon. So that's, I think, the December balance date's the first ones that come on stream. In terms of how we work with the Australians, we're probably providing them with a little bit of insight as to the sort of practical challenges that you actually have when you're rolling out a regulatory regime when you haven't had one before, and you're doing that in short order with some technical aspects to it that aren't that well understood, and systems and processes that aren't that great. So it's actually very challenging from an assurance point of view, and you need lots of planning, and your clients need lots of support. So we're providing a bit of that support. And I know that the Australian firm, which is who I obviously deal with in Australia, has ramped up significantly in terms of resource to be able to cope with the rollout.
Okay, let me follow that up, Jyoti, with in order to do this. I mean, I think one thing we're learning, we have learned in the last couple of years, is this is actually hard. It's a typically wonderful idea that is a lot harder to do in reality than many people realize, particularly when you start talking about the data structures, the risks, the controls, the aggregation, and the reporting decisions you have to make. So I'm curious, what kind of skill set does we've got two major players here. You got the client personnel and the auditor personnel. And I think Jonathan alluded to both sides of that. What would you have to say about those? Are those skills there? Is there a steep learning curve? How are things developing?
Yeah, so in terms of, I suppose, speaking from the insurance provider's perspective, I think especially given the subject matter at hand, you need a set of financial audit skills, but you also need the technical specialists. I cannot speak to engineers on the other side. They actually want to see the like in our teams as well. Similar to, any industry specialists, you got to need to have those people who've got the subject matter expertise in the relevant area or KPI that you're actually assuring. So the need to have these integrated or mixed teams is so critical to, one, understand the subject matter, but then also to actually apply the auditing procedures. I think likewise on the report preparer side or on the client side, those that gather the information are not necessarily the financial people. They are on the ground dealing with health and safety, those specialists in those areas or with emissions. And then likewise, if you look at what the standards are maybe going to be asking us, especially when you determine what the financial effects are going to be, the client themselves are going to need to probably bring in modeling specialists, financial experts to actually show the proper and true story. So I think you're going to need a really mixed team on both sides to be able to, one, prepare good quality data and tell the true story, and two, to actually give that independent opinion by ensuring you do the right kind of work in the right way to give the right quality at the end of the day.
Just out of curiosity, is the firm changing their hiring practices as to the types of people they're looking for? Can you give an example?
In our team that I've worked in, and across the teams that I've worked in throughout my career within sustainability, we've always had a mix of assurance practitioners, mainly people who probably did financial audit like myself, and then realized it was not really for them, and then really enjoyed more the challenge of the subject matter that sustainability really has to offer. And then we've also, within our teams, I've brought in engineers, people with geography backgrounds, maybe also social backgrounds, because we must not forget there's a social element to many of the matters that get reported. So we have seen over the years that, when I looked at the start of my career, the teams were really actually more subject matter expertise, but they've evolved to include people like myself as being assurance specialists. And I think that gives you the right balance to be able to audit the subject matter at hand. So I would assume that similar to my firm, many of the other firms and other practitioners out there are having these multidisciplinary teams in place.
Dan, I'm not sure if you disappeared completely but anyway, we're talking about the skill set needed to provide assurance, both at the client level and at the audit firm level. In the United States, in the last few years, since COVID or just after COVID, we've observed a significant change in the hiring routines of the large firms. They don't hire nearly as many traditional accounting students out of university as they used to. So I'm curious, is it easier to teach an auditor ESG topics, or is it easier to take an ESG expert and teach them auditing? Or do you just need blend the two together?
I think that's a very good question, and we've tried both. And myself, I'm an engineer and don't have an audit background, so I guess I'm an example of one of the routes. But I think the magic happens when you collaborate between people with the audit background and with people with a not audit background. And that's what we've tried to do, at least in our Norwegian practice, is that we have the team that I'm part of, a mix about, I'd say, 50-50 with people with the finance background and people with anything from geology to biodiversity to biology to physics to chemists, etc., etc. And we mix them together. And then we've also trained more or less everybody that's involved in the sustainability audit with special training from the auditor side. So to become a sustainability auditor in Norway, you need about 6 days of full day training, going through every single topic, which is mandatory for all auditors. So the larger audit firms have collaborated doing that training, and that's been quite a significant, let's say, lift in the competencies among the big, the larger companies at least. So I'd say what we experience is that I learned something from the auditors, and I think the auditors learn something from me. I think that's where the magic happens.
Yeah, just as an aside, I've been known to say that I think we as auditors, and the other three of us, I think, come from a more traditional auditing background, that we actually undersell the expertise involved in verification, that it has its own value, and sometimes we're almost embarrassed by that point. But it's critical, obviously, for others. So, Jonathan, do you have anything to add to this part of the discussion?
Well, I do a little bit. I concur with everything that's been said. I think it's very fair what's the way it's been framed up. I do think it depends a little bit on the topic and that you're assuring. We sort of found in the New Zealand context, because it's very narrow in New Zealand, it's very much focused on greenhouse gas emissions. There's not that much engineering required, etc. That we went down a route of recruiting quite a number of people with greenhouse gas emissions sort of capability and experience, and we've still got that capability and experience. And I think, Robert, to sort of call out your point, we probably undervalued the assurance skill sets. So we've now got probably more people in our team, assurance team, who've come from a financial reporting assurance background that we've then upskilled with some technical experts that are within the team around greenhouse gas emissions, because we are only focusing on a very narrow area within sustainability. Once it moves beyond that, I very much agree with what's been said. You've really got to have a multidisciplinary team. Understanding the subject matter is absolutely critical, because that's where the risk is around manipulation, misrepresentation, etc., which you've got to be fully aware of. But we don't do a huge amount of that work at this stage in New Zealand. The resources that are available in the sustainability landscape have definitely been focused in hard on climate-related disclosures.
Okay, I've heard the word standards a number of times in the last few minutes. Is somebody willing to give us an overview of what the current standards are for providing assurance and sustainability reports? And I'm going to come back specifically to greenhouse gas emissions after we have a couple comments here. So I'll leave that up to whoever wants to volunteer to talk about the current standards out there and where they may be going.
I'll give you my from our South Africa perspective. We within our firms we use ISA 3000 as our assurance standard. That was supplemented with 3410. And that's been the standard that we've used for as long as I can remember in terms of providing the assurance. I do know that there obviously in the marketplace, there are other providers who use other standards like A1000 AS, which and that may be for smaller organizations that do use it, or not maybe needing to meet various requirements under the ISA 3000. I think where the standards are going, there is a global standard that is released now in terms of ISSA, all these acronyms, 5,000, that has just come out and will be effective from, I think, December 2026 onwards for those years ending in that space. And that will be, I think, will be for each organization to determine whether they're going to apply it. I think in the same way that we've seen reporting global baselines, it would be great to see adoption of a global assurance standard in the same manner. Now, that standard is obviously not, it's profession agnostic, so anyone could really use it. It could be applied to any type of sustainability subject matter. And I think trying to get consistency in terms of the adoption of that standard, application of it, will also hopefully bring some consistency in terms of approach. So clients get familiar with the same level and rigor no matter the kind of provider that's actually giving it. So I'll just maybe stop there, and I'm sure Jonathan and Dan would have a few more additional comments.
But before we do that, let me interject. I assume you're referring to the IAASB standard,
Yes.
which International Assurance and Auditing Standards Board, for those in the audience who are not familiar with our lingo. And that has been proposed, about 2 years ago or so, and is about to be finalized, isn't it?
It's actually been released already. So it has been finalized and it's in the marketplace. The adoption or the effective date, forgive me, but I think it's around the end of 2026. And early adoption is permissible. So it'll be determined, I think, on each region and each jurisdiction and each firm of when and how they adopt it.
Okay. Dan or Jonathan, you want to add anything to the overview of the standard situation?
Yeah, I can briefly add, not being an auditor myself, this is kind of a bit outside my field of expertise, but ISA 3000 is what we're currently using, and then looking at the international standards as they're being launched. But this is also connected to the requirements of how the regulatory CSRD is implemented. So we will follow suit with the rest of Europe on that term.
I was just going to say, Robert, that I think there's a lot of work that will need to be done over the next few years around the assurance standards, and coming back to some of the points that have been made around alignment. In New Zealand, for example, you're allowed to either apply the ISO standards or the 3000 standards, and in fact 3410 for greenhouse gas emissions. So you could sort of do either or. And it was very much an assurance standard developed in New Zealand to fill a gap. So that's the situation in New Zealand. I think as 5000's rolled out, which is practitioner agnostic, I think that will come with a lot of guidance. It'll come with it'll answer a few questions that everyone sort of has in around the assurance space, which I think is really good because it'll create a international level of alignment, which is important for users of that information, because at the moment you're not quite sure. There's so many different types of assurance opinions, and they come with a few different caveats and disclosures within them to sort of qualify them in some way. They're actually quite hard work to read, and I think there's a lot of value going forward around that level of alignment and consistency globally.
Well, and that confirms my understanding also. Although it is interesting, we've mentioned greenhouse gas emissions a number of times. There's been standards on that specific topic for a longer period of time, if I recall. In fact, one of my Australian colleagues was instrumental in writing that standard, who was at the University of New South Wales in Sydney. Pardon?
I was just going to say, Robert, I agree with you. I think that has been around for a long time. 3410's been around for a very long time. I think the big thing we observed in the New Zealand context was, as you pivot from a voluntary environment to a regulatory environment, the challenge that goes to assurance standards, reporting standards, just lifts significantly. And some of those standards that maybe were adequate, if you like, in a voluntary landscape, when they're in a regulated environment, just don't stand up to the same level of scrutiny, I suppose.
Well, I think Jyoti said, you made a comment about how different assurance providers, because not everyone in this space of assurance is a chartered accountant, CPA, traditional accounting firm. And you said different providers use different sets of standards. How much variation are there across these standards? And do you think that the IAASB standard will bring this all together into, as I think Jonathan just said, an aligned set of standards?
Yeah, I think so. I think the standards, because they may not be as specific, did result in probably different types of approaches. I think the level and depth of interrogation, let's call it, of the information, which also then results, I suppose, in differencing in fees and costs being proposed to clients out there. With those standards, some of 3000 and 3410, the original standards that are being used at the moment, they do require really strong systems of internal quality management, independence, ethics, a lot of rigor, and systems to also monitor how firms are actually putting and applying those standards correctly. Some other assurance standards may not require the same level of equivalence. And that may provide, I suppose, a bit of a challenge when ISSA 5000, because it does require one to apply the international quality management standard and make sure there are proper systems in place within organizations to monitor these things. Those which do not have a global footprint or able to leverage off a global support may find that a bit of a challenge in the future. But, we do, as Jonathan said, hope that as we go down this path, to try and achieve that level of consistency and quality amongst any type of provider doing this kind of work, that there is enough guidance and support given, I suppose, from a global perspective to allow that to really happen. And I suppose we'll have to watch this space as it plays out in the next couple of years.
Well, yes. I mean, it seems pretty obvious to me that writing a standard does not solve the problem. It will take a lot of experimentation and effort to essentially figure out what the best path is for doing these things. The part of the IAASB standard I find fascinating is the fact that they claim it's not centric to the accounting profession and suggests that other potential providers could use it. I'm not sure that other potential providers are happy with the inclusion of the international ethics standards, though, in there because of the things you just said. So, Dan, I realize the EU tends to move somewhat as a block, but isn't there going to be variations across at the national level? Because I assume it takes some enabling legislation or intervention or regulation in each country to have the official EU solution applied.
Yeah. So we can always interpret the directives from the EU stricter than what they have in the EU. And one of these topics were related to independent audit providers, whether those were allowed to provide attestations under the CSRD. So, and that was more or less left up to the different member countries to decide whether or not to allow that to happen. In Norway, we've not been let that happen. So, in other words, it's only authorized auditors from a financial perspective that are allowed to perform a sustainability assurance under the CSRD. There's been quite a lot of discussion back and forth on this, and I think with the original scope of all of the companies that were intended for CSRD, this was very interesting for a lot of, let's say, non-audit providers to move into this market. But now that it's kind of been quite reduced, I think the interest from a more financial perspective for these companies, it's not that relevant anymore. I think therefore the discussion of letting new audit providers into the market is a bit dead, at least now in the middle of the EU debate of rolling back the CSRD regulation. So as of date, it's mainly the main audit providers, the big four, big five, however you want to call them, that are in this market. And I think at least for the foreseeable future, that's where we'll be. I think the main discussions in Norway have been very practical. So who's going to be the regulatory authority to survey that they're withholding all these standards? Can they do it from year one? Will it be from year two, year three? Independence issues. All of these things have been quite complicated. So I think they've just gone for the simple solution to allow for the financial auditors to continue. And at least with now the rollback, I think that's how it will look in the foreseeable future, at least.
Okay. Well, thank you. So the standards are coming together. Is my general impression. It seems like that. Well, you're all much younger than I am, I believe. And let me tell you a little story about what could have happened without the nature of the regulatory intervention. In the 1990s, when electronic commerce, business to consumer, and Amazon were just getting started, the professions in the United States decided to offer an assurance service to essentially verify the integrity of website design and protection of identities. The American Institute of CPAs and the the Canadian Institute of Chartered Accountants developed a service called WebTrust. They rolled it out. They spent millions of dollars developing it. And then they found out nobody wanted it because there were so many competitors in the market with a lower cost that it basically did not fly. I remember having conversations with some people a couple of years ago when the IAASB first proposal came out, that this was an issue with the idea of a non-centric set of standards. I don't know how many, since I'm the only American on the line, let me also point out, I don't know if any of you actually bothered to read the proposal from the Securities and Exchange Commission that came out a couple of years ago on sustainability reporting and assurance. It was a 550-page document, roughly, and it is basically building to reasonable assurance over a sustainability report. But buried in the very back, like page 500, they actually stated that they wanted to have a assurance provided over the quality control and internal control of the information that goes into the sustainability report. That would, to me, my reaction, that's a full employment act for auditors, because I don't know anybody other than a traditional auditor could do that. But Jyoti, I wanted to follow up because you mentioned this in your comment about the quality of the systems and the quality of the data. So where do most of your clients stand on this, and how hard is it for them to build the necessary data structures?
So in South Africa, most people are reporting on key performance indicators. Maybe as much as they do have a whole suite of various types of reports, and assurance is really much on key performance indicators, not necessarily governance processes or strategy or risk in any of those areas. I do think it will get there over the next couple of years. But to get to that point, to assure the bigger picture or the full report, as I said, as you mentioned, Robert, you need to actually have proper systems and controls in place. And currently, majority of the people work on the mighty MS Excel, or sometimes even on a piece of paper that is kept. So the audit trail sometimes can be lacking, which does obviously hamper the ability of one to then be able to actually provide assurance over information. I think there are some organizations that are more mature. They have been doing this for a very long time. And they are using some sort of databases. There are various service providers out there, and all are looking to put into place some sort of kind of system to be able to, I suppose, record the information. But even with that, I always caution to say that you got to be sure that the inputs are the good quality. The system is just the system at the end of the day, which monitors, which you'd use to analyze information. So you got to have the right processes and controls from the cradle, the origination of that information. The people who generate the information need to understand why it's really important, and really make sure that there are those no legacy risks or they're mitigated. in various forms and manners to be able to ensure that the good quality actually comes out at the end of the day. So in our environment, we see a lot of Excel, some moving towards using some kind of systems, more mature kind of organizations. But once again, the review and oversight we have found time and time again to be an improvement that is required. So those kind of the same kind of controls you would see in a financial space, we really see them needing to actually be embedded now in the sustainability space. And that would often be a comment that I would raise in a management report. So whilst we do get around it eventually by not auditing controls and really going down what I would call the tests of detail to the really nth degree sometimes to be able to assure the information, a lot of the sort of management comments we raise is consider some sort of technology, make sure you've got a good audit trail in place, you keep the documents to support it, whether they're estimates, judgments, or even the number that you've actually used, and put in some review and oversight really in place. So that's the scenario that I've seen within the African environment.
You just accidentally gave me a Back to the Future moment.
Sorry.
Well, because I remember having serious discussions 25 years ago about the dangers and risks associated with user-developed spreadsheets as a major source of information. Because, first of all, people always make mistakes in spreadsheets, and they have certain built-in self-checking, but garbage in is still going to be garbage out. So I can see that raises, in a world before automated work papers, that would be quite a challenge. So that leads me to the next question. I'll direct it to you, Jonathan. What kind of technology tools is the firm developing? I mean, do you have automated work papers for these kind of things like you would for a traditional audit? What kind of technologies tools do you have available?
Well, we use exactly the same tools that we use for our
Okay.
Yeah. So all of the technology that we use for our financial reporting related assurance, we use for our non-financial reporting related assurance. I think I just want to make a couple of points, if that's okay, Robert, just about some of the practical transitions that we've experienced here, which I think will highlight some issues as well. Is when we first got involved with the greenhouse gas emissions assurance work, but the broader climate-related reporting, there had often been quite a lot of reporting, sustainability reporting, done on a voluntary basis in New Zealand by a number of organisations. And there may have even been an element of assurance provided previously, relatively limited and focused, but there may have been. I think the big shift we got as we transitioned from a voluntary environment to the regulatory environment is that the processes that you need to go through, the documentation that's just been alluded to, that's required under a regulated environment relative to a voluntary environment is quite different, because the regulator oversight's much more critical and the expectations are just generally higher in a regulated environment. So what we experienced is a couple of things. One is quite a lot of education up front of our clients and working with management teams, often sustainability people, to sort of educate them around. They would educate us a lot on the sustainability aspects, the subject matter itself. So we definitely learned a lot from them. And then they would learn often from us around how you set up a good process, with appropriate controls, appropriate levels of oversight, good governance, including data governance, data lineage, trying to get them to think about using existing systems and processes that are already assured, whether it's by external auditors for financial reporting purposes or even their own internal audit teams. So getting them to link it back as much as they could to very tight controls and processes within their existing systems. We then can use a lot of the work, because often now we see high levels of alignment between the financial statement auditor, and in some territories it's actually required that it's a financial statement auditor. Not in New Zealand, but definitely in Australia, it's required that your financial statement auditor does this work. But there's a high level of synergy and correlation between the data that is assured within the financial reporting world that then feeds into a number of calculations, KPIs, and other metrics that are prepared as part of non-financial information. So that's part of the reason why we've ended up with a number of the audit firms picking up this work, because there's so much of that work that's already being done on the financial statement side that you can leverage on the non-financial statement side.
So actually, I'm curious, because it's something that I don't know. If you're a client who's using like an SAP or Oracle type system, how hard is it to overlay this information into that system?
Sometimes it's quite straightforward. So we're increasingly seeing organizations, particularly remember we're focusing primarily on greenhouse gas emissions. I'll come back to other metrics in a moment. That's a bit different, but definitely when it comes to greenhouse gas emissions, a lot of the information that needs to drive the calculation or the activity, the underlying activity that drives emissions, can come from ERP systems. Yes, you sometimes need to gather that information from third parties, which is a challenge, particularly when you're starting to drop into, scope 3 emissions, the value chain stuff. But the other components of the calculation actually come out of often the financial reporting systems or existing operational systems that the organization has, where there's assurance by external auditors or internal auditors. So the more we encourage that as much as we can, the more that our clients can lean into that, the better. As we talked about, the good old Microsoft Excel spreadsheets, you want to try and avoid those. You want to avoid them at all costs, and come back to, maybe they'll be used as a tool to do some of the calculations, obviously, but using the existing systems and processes to ensure that the data is complete and accurate and well-governed and secure and all of those good things is really, really important.
Jyoti, is your experience consistent with what Jonathan just said?
Yeah, so in the South African environment, I haven't seen a lot within the various existing systems that they use. But I would say, very much similar on the emissions side, and probably maybe on the safety side, especially in terms of hours, because that is linked into clock-in records, which then links into payroll records, or maybe gender diversity, which comes from headcounts. All of those exist in the current, I suppose, business systems, so to say. There are obviously certain nuances and other KPIs which probably just still remain in the mighty Excel or the Matchbox version. So it is a balance of the two. And I think back to simple things, even in terms of the emissions, when you look at scope 1 and maybe you're looking at fuel consumption, it's quite easy for the financial team, whilst they're plugging in the invoices they've received from suppliers, to probably be capturing at the same time the quantity of that fuel. And that quantity of the fuel is an immediate input into your scope 1 calculation, for example. So I think there are certain clients which do it, and I would encourage other clients to not reinvent the wheel, but try and use the systems and the governance processes that you've already got there in place to ensure that if you consider your financial information to equate to the same level of importance as your sustainability, to make sure that that does get in place then.
So let me follow up with a slightly different question here. So do most of your clients also hire the firm to do the financial statement audit?
Yes, I suppose because this is a voluntary, in the South African environment, it is a voluntary assurance and voluntary reporting. You do see a mix of, sometimes the financial auditor being different to the sustainability auditor. But I'd say probably the last 12 to 18 months, there has been the move to align the financial auditor with the sustainability auditor, because I think as clients are starting to see the overlap in their own governance processes, and that reliance can be placed on sometimes the work that the financial audit team has done to actually reduce the impact on or the need of what the sustainability team or the specialist then come in to do it. So we've seen a mix, but there's definitely been a move or a shift towards that in the last 18 months in our country.
Jonathan, I saw you nod your head. So would you say that this potential integration of the services will actually help with the quality of the financial statement audit? Have you seen evidence of that or anything?
Yeah, and vice versa. I think it's mutually beneficial to both. I think coming back to some of the other points that were made originally around some of the other ethical considerations, if you like, the quality management systems, etc. It's often, if you're the existing auditor and you're already doing the assurance work, it's often it's relatively easy to appoint that auditor to do the other assurance components because they're already independent at the firm level and at the individual level. They've already got the quality management systems and processes in place. There's a significant amount of crossover between financial systems and operational systems, and then therefore the sustainability information. So it sort of makes sense. And the regulators, to be honest, probably we've experienced in the New Zealand context anyway, they're not coming out and saying, they're not forming a view either way. But for them, it is probably easier for them to have to deal with just one assurance provider rather than multiple assurance providers as well. So it does sort of make sense. And that's the trend we observed once it became regulated in the New Zealand environment.
Okay, well, thank you. Dan, I'm going to change the topic a little bit, and I'm actually going to put you on the spot, given that you have an engineering background. I recently read a paper about how firms are using blockchain technology to aggregate their greenhouse gas emissions across the supply chain. Have you encountered that in your practice?
Not to perform accounting itself, but they do it to track certain products. So not on a company level, but on a product level. Yes, we've accounted that. And that's more on tracking material flows in and out of a company and through, let's say, complex processes. Say if you're producing certain metals where there are different stages of that metal production, and you have maybe recycling components, then you do it on a product level. Not seeing any evidence of using that to then use that information back into the counting of, let's say, company level greenhouse gas emissions. But there's definitely synergy, so I guess it's just a matter of time before we see they take that into the larger accounts. So yeah, there's movement, but I think kind of the hype cycle of a blockchain was quite high a few years back, and now it's more pragmatic approach to it, where also the energy consumption and all of these perspectives are also included into what value do you need and when do you need it. Tracking something in blockchain just to track it in blockchain has no real value. It has a value if you need to protect the data going from party to party, and that's where we mostly see it used.
Yeah, one of the counter arguments is that you're still relying upon the participants to input the raw information. And as the writer said, rubbish in, rubbish out applies just as much to a blockchain as it does to anything else. But it could create an appearance of reliability that, creates an expectation that where the auditor may lose some of their professional skepticism, because we hear this thing, we have this hype about blockchain that we hear everywhere. Anyway, so we have just 10 minutes left. So what I'd like to mention now ask you is, what experience do you have with buy-in and direct action or input from the governance side, from boards, audit committees, or whatever? Are they hands-on for this type of activity? Dan, you've probably spoken the least, so let's let you go first here.
No, in Europe, the CSRD requires then a sustainability statement that will be signed by the board of directors. So therefore, the board of directors have a automatic responsibility for their sustainability reports. And what we've seen the trend is that most audit committees have now changed their names to Sustainability and Audit Committee or similar types of names, and they then have all the contact with the auditors and kind of do it in the same way as with the financial audits. And that's why we also see kind of back to the previous question on kind of having two different audit providers. now that you have the board involved, them having two different audit providers having discussion with is also complicated. So we've had instances in the past where we've performed the sustainability assurance and another party has performed the financial audit, but they backtracked on this and then and gone to one single. But in general, I think it's a very, very positive change that the boards are more active and are given the formal responsibility. We recently did a survey in Europe with 200 largest companies where we looked at kind of how integrated are the sustainability strategies into business strategies. And about 50% of the companies say that their sustainability strategy is completely separated from their business strategy. And if you look at that, I think that's a board matter in and of itself, and kind of bringing the attention of sustainability up to the board level. I think that's maybe something that could change that statistics and maybe see that those two things are maybe should be more integrated than what we see in practice today. So lots of positivity, although the flip side of it is competency of existing board members on this topic, and competency on audit committees to understand the risks related to sustainability reporting. It's not made, fixed overnight, but that's also a development that's at least moving in a positive direction with the formal responsibility being moved to the board. So exciting to see. I hope it will kind of push the agenda even further.
This is my second Back to the Future moment in this panel, because what you're talking about takes me again back to the 90s. We were talking about business risk audits and how business risk drives audit risk. And personally, I think it was fairly unfortunate that when the PCAOB in the United States issued their internal control audit standard, they essentially ring-fenced it to only include internal control over financial reporting instead of all the broader activities and risks and controls, which would be very relevant to the space we're now talking about, because we're clearly outside the traditional financial reporting cycle. And at that, an understanding from, if we developed that 20 years ago, it might have been actually much easier to be building what we need to be building now, in my opinion. Anyway, Jyoti, Jonathan, can you confirm or have a different experience based on your own related to board or audit committee involvement?
Similar. I think that, again, as we sort of talked about before, as we transitioned from voluntary to regulatory, it wasn't on the agenda so much when it was voluntary. It was sort of sat with the sustainability team and sometimes even the marketing teams, and didn't necessarily get to the board level to the degree it does now. I know that when the regime in New Zealand came in, there was a lot of education and capability building, upskilling, sort of dispelling a lot of the myths around what sustainability reporting is. And I think we're slowly getting there, but we're getting a lot of boards now realizing that sustainability risks and opportunities are actually financial risks and opportunities. I think we're moving away from this sort of language around non-financial information to, if it's not irrelevant, if it's a risk, it's just a genuine sustainability risk that ties back to what Dan talked about, strategy and their materiality assessment, so things that matter to them, then it should definitely be on the board agenda. It definitely needs to be taken very seriously. And if you're publishing any information associated with that, it is strategic information. It is effectively should be treated the same as financial reporting information. So we're seeing a significant shift in attitude around it.
Okay. Have you seen a shift in the composition of boards as a result of this, these forces?
Not necessarily composition, but definitely a lot of personal upskilling. So a number of the board members have gone on a lot of courses. They've done their own, tertiary, extramural sort of activities. So they're investing in themselves significantly.
Just wanted to add to Jonathan there that in the European reporting requirements, you also need to report what the competency of your board members are on sustainability. So making that a reporting requirement and having transparency around that, that's really pushed it, because it's a bit uncomfortable for some boards to admit that we've signed this, but we don't necessarily have the competency, which has been a really powerful tool. It was quite a simple trick. Just be transparent about what you know. Kind of pushes the competency quite a lot in these companies.
Jyoti, do you have anything to add there?
No, we've seen a similar uptick as well. I think because they need to sign these statements or these reports, the boards have really started asking for more training, just more understanding of the environment. And I think there's the more realization that this just needs to be embedded as part of your business operations. It affects your decision making. And when you consider all elements, which you really should be in moving which strategy you take, how you change your strategy, mergers, acquisitions, all of these things, it all takes all these different elements of the business, whether you call it sustainability, non-financial, financial, all of these things matter. We have seen in terms of appointment, though, of assurance providers, it ranging between audit committees being delegated out to social and ethic committees, and actually even procurement then. But it's the education, I think, of all of these committees, all those, even in procurement, as to what the value of assurance really does bring, in order for them to be able to assess whoever they do appoint in the right manner going forward. So a range, but definitely an uptick across the board.
Robert, I was just sort of endorsing that. I just want to sort of throw in one final comment in and around this. The educational piece with directors can often be as simple as saying to them, when you're preparing and reporting on sustainable information, it does need to be material and it does need to tie back to strategy. And also that as an assurance practitioner, I have to assess that it's balanced and free of bias. So if I don't feel comfortable with it and I feel like it's presenting a particular position and it's not a balanced position and not an unbiased position, then one, I'm obligated under the assurance standards to consider that. But two, from a reputational point of view as the assurance provider, I've got to be very careful as well. So I think there's going to be a real educational piece around financial reporting. Has it effectively almost unconsciously built in. People understand the concept of, bias and taking, particular positions to achieve certain outcomes. But they don't think about it the same way with sustainability reporting. And I think they will start to, that it's important that it is balanced, that it is considered, that is delivering a message that may not necessarily be favorable to them around sustainability. And that's something that's a bit of a shift in mindset, and it makes them quite nervous. So there's a bit of green hushing going on now, and as well, just to avoid even commenting on it, because it makes them very nervous.
Well, the way I kind of usually put it is we've had 100 years to figure out what earnings are, and we still can't agree. So what makes us think that in the short period of time we've been looking at sustainability reports, we'd agree on what accurate KPIs that don't reconcile with each other, what makes them good or bad? And I think we still have a steep learning curve to go.
We do.
We're pretty much out of time, so if you don't mind, 30 seconds would be enough. Just what do you think is going to happen next in the next couple of years? Dan, I'll start with you.
Well, we're having some turbulence, let's say, in Europe with regulatory debate, without a doubt. But if we take a big picture of this, we're trying to represent, real financial risks and report on those. And those financial risks won't disappear, although we're having difficult political climates that are having opposing views on urgency of climate change or urgency of different social issues or similar. So, the risk picture hasn't changed. And if you go to the World Economic Forum or any of these risk pictures, sustainability is always kind of on the top 3, 4 year by year by year by year. So although we're kind of having this turbulence, I think that that fact is still there, and that will still kind of prevail, and we will we will still have reporting on this information, because investors will require it, because that's essential to understanding what sustainability is, and what the financial risks that different companies are facing. So in the longer perspective, I think that kind of yes, we have some turbulence, but in the long term, I think that people will come to agree that it's valuable, it's worth the effort. It is value creation to work with sustainability within businesses, and I think that's what will prevail, and then we will just see a development, maybe in a slower speed than we thought initially in Europe, but still the development is in a positive perspective, and I think that the changes that we've seen in Europe is being received quite positively by most companies, that they actually have a little bit more time to not rush too fast into a lot of new topics at the same time. So I'm quite positive for the future, but it's not necessarily only the regulatory whip that will get us there. There will be some carrots, hopefully, along the way as well.
Jyoti, any final comments?
Yeah, I'd share the same views. I think businesses are really starting to see that this needs to be embedded. It's part of what they need to do. It shouldn't be driven only by regulation. I think if you're going to play in the global capital markets, businesses starting to understand that you're going to need to provide this information. I think smaller organizations within the value chain as well realize they're going to be called upon to provide insights and inputs to their suppliers or customers along. And if they want to play in that value chain, they're going to have to participate. So I think it becomes a business imperative. People need to recognize it. I think everybody's going to play along, and the regulation probably just will drive, the reporting outcomes. I think we need to be careful to ensure that if we hopefully can use the global baselines that are there for reporting, global baselines that they are for assurance to achieve consistency and quality, and just not increase the reporting burden on someone. Do this because it makes business sense.
Okay. Jonathan, final word. Actually, I get the final word. But
You do get the final word. I was going to say two things. One is, I think that there has been quite a lot of pushback around sustainability reporting and the burden. So I think that as a profession and as a broader sustainability community, I think we need to get better at articulating the value. I really think it would be great if we could get some passionate, clear communication around the value associated with sustainability, and that it is and this is the accountant talking, that there is genuine financial risk and there is genuine financial value and opportunities. That's the first thing. And I think the second thing is that we take sustainability off the other table and put it on the main table. So it's part of how organizations think. It's been alluded to many times on this call, but I think we're slowly getting there. It underpins all strategic strategy. And in the New Zealand economy, in the New Zealand context, there's literally nothing here that isn't impacted by climate or nature. Zero, nothing. And I think if we can't crack it in the New Zealand context, and I know there's a number of other territories around the world will be similar, if we can't crack it here, we can't crack it anywhere. So I've taken it on as a bit of a personal goal of mine to try and clarify the messaging and get some better engagement with broader society around the topic of sustainability. I think all assurance practitioners in this space should be trying to do the same.
Well, thank you. Thank you for all those comments. The one word that I'm going to take away from this session is balance. This idea of balancing operational and sustainability issues in the strategic plan of an organization, the idea of balancing the burden versus the value of the information that's being produced, the balancing of the audit itself, the assurance engagement itself. These are all difficult questions which are going to take some time to answer over as we get more and more experience in this area. So I thank you for your time and energy helping me do this panel. I found it quite interesting. And all I can say is if we do it again, you may hear from me. But thank you very much. I appreciate all your inputs.